Hello, everybody. Thank you very much for taking time and coming to our panel. I'm really excited because we have a fantastic panel. Not only that it's very diverse panel from the gender point of view, but also from the experience point of view. So without any further ado, let me invite to the stage Richard Hartley from Cytora, Lizzie Lubchansky, Clairy, Moraitou. I knew I won't get that one. we practiced, but and Nicola Millard. Thank you very much. We will start with panelists introducing themselves, and then I will give you a little bit overview how the panel is structured. But at the beginning, I also already would like to encourage you to start thinking about your questions, because it's not only about the panel content, but also about audience content. So I believe by having open conversation here, we will get the most of value from this panel. So let me start by asking each of the panelists to introduce themselves.
Thank you very much. I'm Richard, the CEO of Cytora. Cytora help will transform underwriting for commercial insurers. We help our customers target, select, and price risk using artificial intelligence and billions of external data points. I'm looking forward to talking more about how that relates to the customer journey and improving the customer experience.
I'm Lizzie Lubchansky. I'm from Swiss Re. I'm a behavioral research manager, so I sit in a small team of behavioral researchers and experts who help our insurance clients to better understand the unconscious drivers of their customers' behavior. I've been there for 5 years and I have a background in health psychology.
Hello, I'm Clairy Moraitou. I come from Zurich Insurance. I'm responsible for the Global Customer Insights and Analytics team in Zurich. We measure the customer journey with customer satisfaction and advocacy measures, and we conduct customer analytics for the different companies around the world. I have a consulting background and I'm originally a chemical engineer.
Hello, my name's Nicola Millard. I did used to be BT's futurologist, so that's British Telecom, so I'm not an insurer. I gave up the title of futurologist mainly because it's silly. And I always used to get asked the same question, which I can still feel coming through here, which is, do I have a crystal ball? The answer to that question is yes, I do. It doesn't work, sadly. I'm part of a team that doesn't just look at crystal balls. That would be really boring. So I'm part of BT's innovation team. My role in BT is to innovate with and for BT's very large global clients, of which we have many, many insurers. But I also work with retailers, I also work with airlines, and I also work with banks around aspects of the customer journey. And I, too, am a behavioral person. So I'm a psychologist rather than a technologist. So it's all about trying to understand the customer and the customer's behaviors around the customer journey.
Thank you very much. So prior to the panel, we had a conversation about how to structure this panel. And just to give you some ideas, we would like to start with where are we today and how we envision the future. So where are we heading to? And then we would like to talk about the journey, how to get there, and what needs to happen, and how are we ready, and what needs to happen for us to get where we are heading as an industry. I'm often asked to run panels, and I sit in panels as well, but also speak in conferences. And one of these conferences, not that long ago, one of the incumbents, not giving out name, said that they invested millions and millions into analytics, and now they know, so they are very customer-centric because they know customers very well, and they know exactly which product to push on their customers. I thought it wasn't very customer-centric, so my first question is, when you wake up in the morning and you say, our company is customer-centric, I'm customer-centric, what does that mean? What customer centricity means to you?
So for me, I'm a huge fan of Amazon as a company, and I love the kind of Jeff Bezos expression of it's day one. So waking up every day and thinking it's day one. And what he means by that is solve your customers' biggest problem and do that in the most cost-effective way. So I feel insurance for a lot of customers it's a commodity product. They want it in a way that's cost effective relative to the underlying risk, and they want to buy it in an efficient way that's simple and transparent. So for me, it's about understanding what insurance is at the core, and then delivering that in a way your customer actually gets value from. But I come back to that expression of it's day one, which really means rethink what you're doing and focus on what your customers want. And for us, they want a good product that's cost effective, and they want it in an efficient and simple way.
Because I work at a reinsurer, we have a sort of B2B2C model, and therefore we have our customers, but we have our customers' customers to think about as well. And the whole reason why my team was set up about 6 years ago was because someone quite senior said, I think it's about time we actually thought about the end consumer, which for a reinsurer is a really, really far away person to be thinking about. So in terms of customer centricity for our clients, for insurance companies, it's about helping them, as you mentioned, about solving their pain points, but also about trying to make insurance more easily accessible to people, the actual end consumer, when you appreciate how their minds work and what they're capable of being able to comprehend and embed into their decision-making processes. So I actually work in a slightly more historical, maybe less futuristic setup of the way that insurance companies still often are communicating with their customers through very traditional means, and trying to innovate those to make sure that they will enable the end consumer to be able to get the insurance that they need in a way they can understand.
Clairy?
In Zurich, we put customer centricity as part of the strategy and the purpose and values already 2 or 3 years ago. And the way we have approached it, and the way I think we should approach it, is we need customer centricity for us means to better know our customers. So how do we understand the needs? How do we listen to what the customer wants, along the lines of what Richard said? And then how to engage the customers? How do we identify, make the customer journey seamless, make the customer journey excellent, and how do we resolve the pain points that they have? So within these two things is what customer centricity means. But customer centricity, being customer focused, it also needs to be reflected in the organization. And in Zurich, we came a long way into shifting from being product focused or segment to being more segment focused and customer focused, if you like. And that helped a lot into getting into the customer focused and customer led, as we want to be saying, area. So,
I mean, all of the above, but also, I think you have to start with looking at customer behaviours, and we typically do a lot of research generally around the world to try and sort of figure out what customers want from a customer experience. And we've been doing that for over 10 years now. And I think from a trends perspective, because I do insights, trends and futures stuff, we can start to see sort of some very distinct trends coming out very strongly. One I call the E word, which is it's either effort or easy. It doesn't really matter which term you use, but one of the primary behavioural drivers from customers, because frankly, insurance is not something that obsesses us. So what we want to do is to make things very, very easy for people. So a lot of the stuff I do in the innovation area, obviously I am surrounded by a lot of technologists, is to try and sometimes rein them back a bit around some of the ideas that they've got, and I just ask a basic question. Does this make things easier for customers? Obviously, it also probably needs to make things easier for the organisation as well. If you get that, that's a win-win. Other behavioural trends that we find with customers that are important, control. Customers like to have control, and that's a perception rather than necessarily a reality. But when you look at things like self-service, for example, the reason that that comes out as very popular amongst customers, if it's easy, of course, is that it also puts them in control. And then as customers, we're also looking for value for money. And again, with insurance, I think it's because you're selling an invisible product, if you like. You're selling risk management, really. I think it's then again, how do you actually convince your customer that you are value for money? And I think in certainly the UK market, where you've got the comparison sites, often customers buy on price and then sometimes regret it when they actually go to claim. So there's that sort of I guess, a sort of disjoint between the purchasing part and the actual claiming part, because a lot of it's very invisible to customers. So again, how do you convince the customer that you are value for money? What is your value add proposition? Because frankly, insurance is quite boring to most customers, to be honest. So how do we engage them better?
Fantastic. Thank you very much. So now we understand what that really means for us, this customer centricity. So changing dynamic a little bit, I will start, as it makes sense, with futurist to ask, okay, so we know we have customer in mind, but where are we heading? What's that vision that we wake up in the morning with, and we're thinking, okay, that's where we want to get?
My crystal ball is broken, so I can never give you the definitive answer on that. All I can say is certainly asking customers what they want in the future is always an interesting exercise, because I think it was Henry Ford that said that if you do ask customers what they want, the answer sometimes is a faster horse. So I think what we've discovered, certainly in envisioning the future and building the future and innovating around the future in BT, is to make it as tangible as possible. So, you know, don't just do PowerPoint. Let's absolutely bring together technologies. We have an interesting showcase, actually, where I'm based, which is just outside Ipswich in the east of England at our main R&D park. We have showcases where people can go round, things like the bank of the future, the insurance company of the future, and you can actually touch and feel the technologies and see how they might work. So we bring a lot of people around to show them the art of the possible. And then we can start to do things like proof of concepts and then test it with customers as well. So again, putting it in front of customers is really important, because then we can find out what works and what doesn't. And I think also with future and future innovation, a lot of it fails. So I get, again, the stuff that I tend to do in the futures area, you just have to, it's a cultural thing. A lot of this is around not fearing failure and learning from failure. And obviously you have to manage that with customers as well and be honest and transparent with them if it doesn't work, but also build on what does work with customers, because they're not going to necessarily come up with, you know, those brilliant new ideas that give you the competitive advantage. They do need to see things, feel things, play with things, and actually figure out with you where that path might lie.
Thank you. Anybody else would like to add to that? Where is your vision?
Yeah. When we kind of think about the vision for commercial insurance, you first have to concede commercial insurance is a catch-all term, but the actual underlying customers are very different. You know, a small 10-person startup is very different from Walmart. So just going to start with that distinction. The people buying insurance at Walmart are very different from, you know, a finance director at a 10-person startup. In terms of kind of SME insurance, I think it will become more embedded in day-to-day experience. So it will become programmatic, where underwriting decisions will be made by machine intelligence. And that's because the premium isn't large enough to support a human underwriting decision. If the annual premium is £500, you kind of want to be making that in an automated way using data and machine intelligence. And that's the kind of future we're really helping our customers build. And I think that's where the market's going. So maybe your bank will, you know, push you an insurance quote where they'll pre-underwrite your risk based on all the data they have. You won't need a customer to go onto Google, then to go onto your site, then fill out, you know, 3 or 4 pages of questions to get to a price. So to kind of summarize that, I think price discovery will become a lot earlier. You won't have to kind of answer so many questions to get to a price. I think another, you know, obvious future for insurance is right now it's very, very kind of heavily centralized around risk transfer. But I think reducing the underlying risk will become more important as we get more and more data. And probably primary insurers will gravitate more into risk management than they are today. And that's because I think risk transfer will become more of a commodity business based on data. So we're starting to see, you know, more insurers thinking about that, and how a better understanding of the underlying exposure can help customers actually reduce their risk and get a corollary of a reduced premium, which is really beneficial to the customer and really speaks to like what customer centricity is. Like, customers care about reducing risk. That was the original reason why insurance was invented.
So I hear from your answers that it's all about data, obviously, and that's how the insurance was founded, also on data. But I'm wondering, you know, when I think about the future of insurance, I'm thinking, are we still talking about sectors and in the future? Because if we think about this, you know, if you think about end consumer, the whole power game today is about money, time, and data. if I am coming back home and I have 1 hour to spend, I can spend this hour on Netflix, I can do transfers, I can plan my holidays and whatnot, right? So all those companies, not industries, but all those companies fighting for my time, money, and data. So are we thinking that, the future of insurance is those silos? Oh, we will sell insurance products, etc. Or, as you said, you like very much Amazon concept. Are we heading towards the platformification and ecosystem and etc.? Where is the future in that sense?
I think you're right. If we look at the data future from a customer perspective, so Amazon is very good at the personalization piece. So if I learn a lot about you, I can start to personalize that experience. The benefit there is it makes it easier for me. I don't have to examine so many options. So the challenge then is, how do I get the data? And I think actually insurance is one of the sectors that is quite exciting and innovative in terms of starting to think about creating these data ecosystems. So for example, with car insurance, obviously cars are starting to generate far more data than you can ever imagine. Certainly we're starting to look at ecosystems where you've got the car manufacturer, maybe the garage, maybe the insurer, maybe the bank, all working together now. So that's the data bit. Then once you've got the personalization bit, you can start to become proactive. So nudge people, tell them the stuff that they want to know on the channel that they want to know, when they want to know it. So that's cool, personalization to proactivity. Then we get the really creepy stuff. And this is where customers start to get a bit uncomfortable. So if you know more about the customer than the customer knows about themselves, and you're starting to intervene with more and more accurate things, and you're starting to become psychic, so offering them things that they never knew that they wanted based on the data, there is then a reaction back. We've seen it in the retail space where people go, that's too creepy, I don't like that, I'm just not going to give you my data anymore. And with GDPR, you have every right to withdraw your consent. So I think we have an interesting future, certainly within insurance and things like the Internet of Things, because that's inevitably one of the parts of that innovation ecosystem that you can draw on. That if those Internet of Things to a customer then becomes all of my devices are talking about me behind my back and I don't see the advantage of it, the inevitable conclusion to that is they turn all that data off and you lose all of that data and you can't then do the personalization and the proactivity stuff. So I think there's an interesting set of discussions, particularly in insurance, around how do you create those appropriate data ecosystems that are to the customer's advantage.
So, Claire and Lizzie, particularly for you, that question. So when you are working with data and you work a lot with it, are you asked by business to look at this holistically? Are you asked by business to look at this like, yeah, it's an ecosystem, or it's like, very narrow problem to be solved in the business, and you look for that data pattern and some answers in the data for this business problem?
So it really depends on the sophistication of the market. So I come from a global perspective, so it really depends on the country and the sophistication of the systems and the stage they're at. But typically, it's all about, building on what Nicola said, it's all about moving from merely transferring risk to preventing and to mitigating risk. And this is what the customers need to feel comfortable with that you're offering, and not to become creepy, within the context of not becoming creepy. So at the moment, if I'm honest, we focus on having very targeted questions being answered. So we develop hypotheses and some scenarios, we select, and we go with a bit of a trial and error. The ecosystem work, we're building it, but more from an innovation angle. From a data angle, we try to match the two, but we need to find the bridges. So developing hypotheses that we can prove, and looking at solutions that can help us implement these hypotheses and scenarios. So this is the angle.
Yeah, and the work I do is very narrowly focused. And I think that ecosystems, at least what I know about them, they logically make sense, particularly in the non-life space. And most of the work I do is in life and health. And it's a bit trickier to try and contemplate what it looks like in the future to have an ecosystem for people to access healthcare or life cover, for example. But I'm also just slightly nervous about thinking about ecosystems, which is research, and we talked I saw in the previous panel before the break about, I completely lost my train of thought, sorry. I think the issue is that we ask people to let us know what they want. And you were talking a little bit about ease of access, and we talk a little about technology being the way that people will be able to easier access their insurance, and then we take away this issue of people having to struggle through choosing the right product and being able to underwrite in a way that's appealing to applicants and so on. But I'm nervous about thinking about what research has led us to those conclusions, because my team was set up, I think, to try and move away from the idea of doing the traditional consumer research, which asks people to predict their future behaviour and talk about their preferences. And I think more often than not, I think we found in our own product development experience is that you spend an awful lot of money doing some very sophisticated consumer research, which results in a very nicely designed product that the consumers have asked for, and then it goes on the market and it doesn't sell. And that's why we don't really believe so much in insights. We talk much more about hindsights, and that's why there is quite a narrow focus to what we do, because we have to be able to observe people's past behaviour to understand what was really driving that, rather than asking too much about the future behaviour. So I think in terms of ecosystems, there's some hesitance on my part anyway in being able to think too hard about how will people actually react to those. And people, you look at the consumer research and it says that consumers say they want easier to access insurance products, they want to have technology, they want to be able to do things easily from their phones. But I know from some experience that extremely digital insurance, particularly in life, doesn't appeal and it doesn't really sell. So some of my caveats.
We also talked before the panel about the challenge that very often you have a lot of insights from a database, but then company is not quite ready to adjust processes or to respond to those insights and change the processes. So from your experience, again, I wonder, you know, each of you worked in either with your business units or with different companies. What are those barriers and what needs to happen, or what is the biggest challenge that you need to overcome to drive the customer centricity and to get the company on the journey?
Yeah, it's a really good question. My experience in kind of, I guess, commercial insurance, and one of the challenges there is you don't interact with the customer very often. Maybe that's once a year. So it's very hard to actually experiment with the customer. To give you a sense of other companies, a company like Twilio, for example, was in the communication space, and they sold to developers, and developers engage with Twilio every single day. And Twilio can run experiments in a week, they can test stuff, they can push new products, they're getting a huge stream of data, and that just is not applicable in insurance, because the customer doesn't really want to engage with the customer. The other part of it is you don't really own the customer experience because you're dependent on brokers, for example. So even if you did want to spend more time with the customers, push them new products, do research with them, it's kind of really hard because you don't own them or not own them, but you're just not having the interaction interface with them. So that's where I think insurance companies are slow to innovate because they don't get the pull from the customer. And a lot of the innovation fails because a lot of what they believe, is going to be valuable isn't really informed by the customer. It's kind of informed by a projection that's internal. So that's one of the big challenges, and that's because there's a massive transaction chain in insurance. Sometimes there's 7 people involved in ultimately an underwriting decision, which is really bad for the customer because they pay an inflated price, but it's kind of also really bad for the insurer because they're not getting the data to build a better product or more customer-centric experience. So I think overcoming that is crucial, whether that's going direct, whether that's building a better relationship with your distribution partners, whether that's building affinity partnerships where you're partnering directly with banks and capturing data. I think the core of it is to find ways to capture better data and understand the customer more, so your iteration loop and your experimentation cycle is a lot faster than it is today. And companies, startups in London like Revolut have what's called a product cycle of 2 weeks, where every 2 weeks they push a new feature live with customers, they get data on that feature the next day. I don't know what the product cycle is in insurance, but I suggest it's maybe an order of magnitude slower, which means the rate of innovation is also slower. So that's kind of, I think, the challenge. And I think it's really a distribution one at the core.
To that point, actually, I wonder, I remember driving online banking where it was just at the early stage, and I worked with one of the big banks and customers were very open to innovation, and they were forgiving our mistakes because we also had to do it test and learn. There weren't like ready to go examples. We had to design this almost from the beginning. Now, the similar things are happening now in insurance as well. But there's a difference when something goes wrong with Revolut and the customers think like, yeah, they start up, they still testing and learning, etc. So happy to be part of the journey, and more understanding perhaps than, you know, when Zurich would, you know, like drive the change for thousands and thousands and hundred thousands of customers, and then something goes wrong. That the impact on brand and everything is much bigger, right? So how to, you know, do you see this as a challenge, and how you can address this with your companies?
Yes, it is a challenge. The customers are not forgiving that easily. The way we address it is, of course, we try to and all insurance are, we try to partner with InsurTechs always, because it's not easy to keep up the game, and we also try to develop digital hubs. So you see a lot of insurers having developed digital hubs within the insurance company, but it's a game that we need to play. There is no silver bullet to go around it. Having the customer at the center, listening to the customers, getting the feedback, trying to do something with it, and not just collecting it. There's no worse thing than collecting feedback and not doing anything with it. Even if it's a small and targeted improvement, and if you communicate about it, customers become more and more understanding. And it's not only about, if I may say, not only about digital and innovative solutions, it's also about simple things, and we do a lot of analysis of the customer journey, of multiple customer journeys. And we see that simple things like improving the letters we send to our customers, making them much more simple, much more to the point, improving slightly the look and feel, it has a huge impact on what the customers believe for us. So it's about being good in everything along the customer journey. One thing, just to your earlier question about the biggest obstacle, I know it's a cliche, but for us, it's culture. It is a cliche, but it is there. And culture impacts really the way the organization is structured, impacts the way people believe and select an initiative versus another one. It's about shifting the mindset from focusing only on the BOP, to the bottom line, the after-tax profit, to actually going for growth and going for customer numbers and customer KPIs. And that only is a shift that is not easy to happen, from my point of view.
Yeah, maybe if I can add to that, the point you made earlier about rewriting letters is basically pretty much my team's full-time job, because I think this culture thing is that, you know, I was really interested to see the CEO of Legal & General up on the previous panel and thinking, well, work that I might have done with them many years ago has been about taking some of the simplest things. We did a very nice trial with them, which I'm allowed to talk about because we presented together at a conference, which was they wanted to speed up the claims payments for critical illness and terminal illness policyholders. And I was really pleased to hear how they've been working with robotics for 5 years, but within that timescale, we were sticking handwritten post-it notes onto the fronts of the letters that went to the GPs, and we were able to significantly speed up the turnaround time of those letters coming back, which then enabled the claims to be paid more quickly. It's completely non-technical. It required a team of 30 claims handlers to be handwriting post-it notes all day, but it had a significant impact for the end consumer. So the culture of the insurance company might be to be futuristic and technology-minded, but actually there is an awful lot to be doing just with the day-to-day and the, you know, new products as they're brought out or new underwriting systems or whatever. You can start from day one, but I think that I think that nearly every insurer that I deal with is completely lacking in data when it comes to stuff that they want our help with, when it comes to helping with retention, or when it comes to helping people through the funnel of their insurance purchasing journey. We're talking about very, very little data that they're able to give us when we ask them to do A/B testing. I mean, this maybe varies by country, but we are looking at a real hassle for them to be able to randomise their customers who receive their letters or their emails and let us know in return what are the response rates, what are the renewal rates, et cetera, et cetera. So I think that there's still a long way to go in the backlog of many of the insurers.
So my next question, building on what we discussed so far, is we see technology convergence. We have, like, you write technology trends and you get everything from artificial intelligence, machine learnings, whatever blockchains, cybersecurities and everything. And I was just sharing with a panel and they encouraged me to share with you the statistics. I've done I'm doing research on blockchain right now, in insurance in particular. And I looked at how many, in Google, when you write blockchain, how many results you get back. Anybody wants to take a guess? Okay. I help you, 12,800,000 as of yesterday. Now, when you dig down and you go into the research space, so something research, not marketing papers, nothing. Now that you know the platform, 12 million is starting point, how many? $1,800. Now, when you remove the white papers and you remove patent papers, etc., it's few hundred research done globally on application of blockchain. And banks and insurance are already spending $10 million, like every 10th bank, $10 million on the platform on blockchain. Just to show, there is fear of missing out, definitely there, in my opinion. I wonder how you feel that. Do you get a lot of requests from businesses like, oh, this blockchain, do we do it? Or, artificial intelligence, can you implement it and how quickly and why we don't have it yet? Or is it mature enough to say like, oh, we have this problem, and I wonder if, these robots or this solution can answer that?
The answer is no. And I work, most of my job at the moment is on chatbots, so AI, sort of, mostly natural language processing, to be perfectly honest. So the number of clients that come to me and go, I need a chatbot. And you go, why do you need a chatbot? And the answer usually is, well, everyone else has got a chatbot. I want one as well. Not a good answer, by the way. So my next question is, well, what do you want to use the chatbot for? And now, admittedly, we're seeing growth in customers using chat. So if you've got a growth of customers using chat, yes, you might want to look at chatbots. But then what is it for? And also, where is its data? So again, it comes down to data again. These things do not work by magic. There needs to be a fair amount of data underlying whatever fabulous algorithm is sitting behind the chatbot. Unless you have the right data, and you might not have it, or enterprise data is notoriously messy. So I've just done one with a bank where the data was on 12 different systems. It didn't work, by the way. So I think, you just learn that sometimes it does work, sometimes it doesn't. But I think it's around appropriate deployment of some of these things. And we were saying earlier that you put AI in front of things. Everyone's putting AI as part of their sales pitch at the moment, so they can charge more and get everyone excited. But actually, it's then going back to the basics to say, well, does this make things easier for customers? Does it make things easier for us? And actually, in insurance, people still ring. Certainly in the UK, the phone is still very prominent in the way that customers engage on the two levels. Again, in the UK, because of price transparency, you tend to get a lot of customers ringing because they've found a better price, so they want to bargain and negotiate with you. Or, of course, when they're claiming, they've usually got, something horrible happened to them. They've had a car crash, their house is falling down. That sort of thing, again, provokes people to go to the phone. So, again, I would ask, don't get carried away with the hype. Sometimes you just have to step back and say, is this the right technology to deploy? Does it solve a business problem? Does it solve a customer problem? And if the answer is yes, it's probably appropriate. If the answer is no, you need to dig down and say, what does make the difference for customers?
I think it comes back to the consulting world, saying, what is it that you want to achieve? What is your target? What is your objective? And then find the tools that help you achieve that. And I think in insurance, we had this thing where we were very much behind on banking, and we had to quickly catch up with banking. And then InsurTech's coming in, and there was a panic in the beginning, and so we had to start from the tools, which is the wrong thing to do. Starting from a tool, you always need to start from the objective and what the customer wants, and then find the right tool to do it. Your objective.
Perfect. I will, as I promised, I will give the time also for the questions from our audience, and thank you very much for posting them. I have them in front of me. So there is one question from Harris, and it's for Lizzie, because Harris says that you ask this, or you make this provocative statement saying that life insurance customers are not yet ready for a fully digital fulfillment. So what do you think are the factors affecting that?
I think it comes back to this point about the fact that people do want to be able to speak on the phone. More and more that I read says that because life insurance is so complicated, you do need to have the advisor in front of you. And we also hear quite a lot about omni-channel purchasing experiences. People like to do their research. Maybe they can look at aggregator websites to find good prices, but then ultimately, if you visit any one insurer's websites, you're still probably a little bit overwhelmed with choice and understanding what the name of the product actually means for me, or actually means for my beneficiaries in many, many years when I die. So I do think that that these are some of the issues.
Okay, the other question comes from Matt, and Matt asks, how do we build trust with customers whose default assumption is that we are trying to avoid paying claims? Lemonade are showing the way in retail lines, but how about traditional insurance to get a position of mutual trust?
It's a very difficult one. We've done quite a lot on trust and loyalty, and I think so. There's a couple of things. Loyalty is an interesting one because it implies mutuality, and I think one of the problems in the insurance market is there's spectacularly little loyalty in some sectors of the market. So. And I think it's that mutuality problem. If you're not seen to offer me the best deal because I'm your longest serving customer, you punish me for staying with you by giving the worst price rather than the best price. I think firstly that doesn't necessarily give you the mutual trust vibe. Absolutely, and then that sort of that kind of problem also permeates into that claim process around, well, they're just basically trying to, fleece me. So I think there's a big problem generally around discussing loyalty in the insurance market for a start, and underlying that is a definite trust problem. Now, I don't have an answer as to how you fix it, but I think it is around, being much more transparent, giving much more sort of mutual benefit. As I said, selling something that's not, you're selling something that you can't change the colour and delight the customer. It's really explaining and making things much more simple in terms of I know what I'm buying, and that transparency piece I think is very important around the trust element as well.
Yeah, it's a structural problem to a large degree because there isn't reciprocity between insurance companies and their customers, and reciprocity over an extended time horizon builds trust. So the customer at the point of buying insurance doesn't actually trust the price they get given. And I think that's true because I think insurance companies often don't use data in the right way. So they don't give the customer the probably the most accurate or most cost-effective price for their underlying risk. And that's really, when you think about risk pooling, that's the whole idea of risk pooling, which is kind of a low-risk customer is kind of paying for a high-risk customer. So at the core of insurance, it's like this kind of bit of a paradox. And then at the point of the claim, the customer doesn't really feel a lot of love to the insurance company, and that's why about 20% of every claim of claims are going to have a degree of fraud in them. So it's a problem that is structural in its foundations, and the whole of insurance needs to be re-engineered to solve that problem at the core. And it's really about reciprocity and more interactions, and that's I think one of the key.
I think adding to that, one challenge that we see as well is if you apply for insurance, you're underwritten and your risk score is there, and you buy the insurance, and then insurance companies give you a lot of solutions how you can mitigate your risk, right? Being it like wearables, being it like telematics or whatnot. But I didn't quite see them giving me back money every month because I start using it. So I'm scored on the highest risk, and then there's efficiency being driven because of more and more data coming. Not often, if ever, it's shared back with customer. Maybe next year with pricing, but guess what? The whole industry rises the pricing, so you don't see it anyway because the price goes up. So as a customer, I'm thinking like, where is this when? Will finally insurance share with me they all efficiencies and they're all, great value they get from data? Would you agree with that?
Well, I do, but I think that's what's quite nice about the Vitality model is that in reality, I could give you a discount on your premium for being healthier, or we could do a sort of dynamic underwriting thing where I could constantly change your premium on the basis of your own behaviour. But the reason why Vitality is really good is because they give you a Starbucks voucher or a cinema voucher or a discount for a holiday, and those things are tangible and meaningful, particularly when you're talking about a life product, which the policyholder will probably never get to see the benefits of. And just going back to the point about reciprocity as well, is that we encourage our our life clients to communicate to their policyholders that they haven't had to worry about the protection of their loved ones for the entire last year or however long the period has been. But no one's been sitting and thinking, I'm so relieved that I haven't had to worry about the the safety of my beneficiaries after I'm going to die. And I think that in non-life, it's a double-edged sword, because you get the benefits of the fact that people do see claims being paid, but they also see claims not being paid. And often in life, your policy can expire before you or anybody will ever see the benefit. So I think tangibility maybe needs to be a little bit about the product itself, but what I like is the idea of giving people things that psychologically mean more to them than just feeling protected.
Looking at the questions further, there was we talked about culture, and Claire, you talked about culture and the challenge of driving the culture. So there are two questions I'm gonna merge together. One question was specifically asking how you structure the digital team. So who should be on the team? Is this interdisciplinary, etc.? And the second question with that, on the customer side. So you have non-digital savvy customers because you always told them they need to see somebody at the end of the line, the personal contact, etc. And now you want them to start being digital. How do you do that? How do you serve non-digital savvy customers and bring them back to the equation? So
the organizational perspective bit. So again, there's no silver bullet. Typically, what one sees is that having a customer experience, small customer experience, digital teams isolated in the organization and begging other lines of business to embark on customer initiatives doesn't work. Customer experience teams can be small, but they need to be the facilitators, and they need to have the power to give a mandate to a P&L owner of the business to implement initiatives that have a customer aspect. And for me, that is key. Now, whether they're structured in a hub and spoke sort of manner, or more centralized or more decentralized, giving power to the different markets, I'm talking about the global team. It really depends, and there are pros and cons around the different organizational structures. But for sure, a mandate to P&L owners is key to be given. That for the organizational bit. Now, the other question, sorry.
The other was the customer side of it. So, non-digital savvy customers, and obviously it's for everybody on the panel, right? It's not only for you, Claire, but, how do you make the non-savvy, digitally savvy, to use the digital or embark on digital journey with you?
I mean, if you look at what the banks did, they gradually withdrew most of the services that you would maybe not the non-digital ones. So the sort of traditional face-to-face banking services, they gradually educated the customer to shift onto self-service channels. Now, again, there is an easy thing. Again, customers are never going to shift to a channel that they don't think is particularly useful to them. In other words, it won't get them to their goal. It might, by the way, but you've got to convince them. It's got to be very easy. So usability is really, really important. But certainly in terms of cultural influence and behavioral influence, and this is where things like behavioral economics come in, the nudge theories around how do you educate, how do you nudge, how do you convince customers to adopt because other customers like them are adopting. I always use social networks as an example. A social network of one would be a terrible social network. So actually the value in a social network is that I know someone else on the social network, so I'm more likely to adopt it. So again, with digital services, if people like me are adopting a digital insurance approach, I'm more likely to get a sort of circle of friends doing it as well. So I think there's lots of things that we can do to nudge customers around the digital piece. But again, I think there's sometimes the fundamental thing around the fact that you are managing risk, that sometimes you have a lot of customers in crisis. Sometimes it's not appropriate necessarily to have a fully digital experience. Sometimes they do just want to talk to somebody.
Yeah, it's really useful to look at the newspaper industry, because newspaper industry, very similar dilemma. They have kind of new media, which is like web-based channels, and they have their existing print channels. And the newspapers that have been the most successful in the last 5 years have accelerated the decline of their print business actively by killing it. Because as a big company, you can't do two things that are kind of rapidly kind of different in terms of the economics, the cost, and the mechanics of actually producing the product. So that's the challenge for insurance companies is if you're building for a 5-year future, you can't continue to do something that is out of odds with that. So you have to really optimize for a future state. whether that's kind of putting your resources into going direct, whether it's making your underwriting programmatic and ultimately thinking about how do we underwrite without people or human underwriters in very small classes. I think that's the key, and newspapers who have done that have had the most economic success. And I think the analog is pretty strong for insurance.
Unfortunately, we ran out of time because, and I have like thousands of questions in my head and more on the iPad. Unfortunately, we cannot answer them anymore. But I would like to thank very much the panel. I hope it was you find this as inspirational as I did, and we are looking forward to meet next year and see how much closer to this crystal ball we are. Actually, thank you very much, everybody.